Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of October 6th, Thursday, 7 p.m. Central Time. All right, friends, I think the pros are pretty neutral going into the report. Many of the stock indices are just trading at the 18-day average of closes. We've already seen the jolts out of the unemployment claims. They've come, they've gone. The traders have had a chance to see that they didn't do enough one way or the other to move the market. The guesses for the report tomorrow are from 250,000 to 275,000 new jobs. Just on the surface, that doesn't sound like you're losing a lot of jobs. I mean, that's just how it sounds. If you're going to lose jobs and get that report to get, I think, favorable, get something in the 225,000 to 200,000 range, and I think that would get a favorable response from the market that, hey, the Fed's program's starting to work. Go up to 300,000 new jobs, and I think you can still argue that there's that lag time between the interest rate hikes and the hope that you will lose a lot of jobs. That's what the Fed wants to see. The Fed wants to hurt the economy to slow the inflation down. Doesn't want to tip it over, wants to hurt it to a degree. I've got my little cat here going like crazy, pulling on the cords. Okay, she knows that I'm not going to do anything tonight, waiting for tomorrow. And that is how I trade these major reports. This is not a minor report. This is a big boy report. This is as important as a major Fed meeting because it's setting the tone for what the Fed is going to do in a big way on November 2nd at their next FOMC rate setting meeting. You've had a nice jump in the stock market. You are up 4% for the week. So even though you were down today, you're holding on to gains overall, and you can see that it's done that. Did the market step out of the downtrend? It absolutely did. Has it started an uptrend? No. It's a bounce so far. And you can say that because you have a lower low and a higher high. So trends are made up of, if it's an uptrend, higher lows, higher highs. Could this become one? Just like that. Wouldn't take much now that you've already taken out the lows of Thursday. Remember, we're already in Friday's trade. To get up over 38.20, stay there. You'd suddenly look very bullish on the chart. In fact, I'd be arguing, are we going back to the 100-day average or the Bollinger Band? And they happen to be together. So, big day for me tomorrow. I'm going to be first thing in the morning talking at 5:30 to my subscribers. We'll go through all the charts. I'll be telling them I'm not going to do anything. I can already tell you that. But I'll tell them at 9 o'clock when I start recording my ETFs, that's where I'll be making all the moves, if there's moves to be made. Why? The report's out. An hour and a half's gone by. Don't have to worry about it. The big money will have hit the market at 8:30, and then I'm picking up those pieces. If there's trend trades to be had, I think I'll be right there for them. That's why I like the combo offering of what I do. It gives you two ways to go. I'm just locked out of the futures at that 7:30 time. I have a rule I refuse to break. I don't go through major reports in the futures markets. Why? You can get your head handed to you. That is the reason why. So looking at the market, you're neutralized. You came out of the bearish embedded reading with an oversold condition. Now you're neutral, and you're neutral against the 18-day average. The same thing in the NASDAQ, the same identical thing in the Dow, and basically the same thing going on in the Russell. So trying to make something out of nothing is crazy. The market that is bullish going into the report is the Russell. It's the strongest. It's got the higher lows, higher highs, and it's over that number. The diehard traders that want to go in are buying. I think they'll have stops at 1734.70, and they'll hope they can get back to the 1821.80 level, 90 level. That's what they're going to be looking for, in my opinion. In the VIX, you came all the way down to the support at the 18-day average, and where did you stop? Right there. You hear me tell you that so often that you'll go to that line in the sand. The markets like to go there and figure out what to do next. In the 30-year bonds, you are still in the bear camp. All the market's done is come up to the 18-day average and kept the pattern of lower highs, lower lows. The pros, I think, went short up here. I think they have stops over that high, and I think that they're hanging on if they're going into the report hoping to get to the Bollinger Band. The smart thing to do is take some of the money off the table if you're going to play that way, because stops may do you no good if you get a crazy number on this one way or the other. In the 10-year note, it's the same thing. You corrected, you broke through this long embedded reading that dropped the market. Now you're waiting for that next whatever's going to happen. You're in no man's land right now. The overall pattern is bearish. The trend is down. I think the pros will sell the market against the 18-day average, which stops over that 113.30 level after the report. In the dollar index, you pulled back to support at the 18-day average. Need I say it? You're not trending. You're just marking time, waiting for things. And the same in the euro. All these markets now are marking time. That is typical. There's nothing atypical going on in these markets right now. British pound, it had its rally in the sun. It's got to prove, or the government there has to prove to the world, that the plan that Ms. Truss has come up with has merit, can pay for itself, can create the growth and everything else. I'm not against it. She's got to prove how it's going to happen. You've got to give her a chance to prove it. Everybody does. Let her have her day. Let's see. In Bitcoin, I don't want any part of this market. What happened in this market? Look at the sideways action and how it narrowed in. This is where you get killed now. All you're doing is spinning around in there. You need a breakout. Could it get a breakout? Well, it goes with the stock market often. So if the stock market were to take off, the fact that you're at the upper Bollinger Band, you backed away from it, it's trying to get over it. Do I think the pros came out today in front of the report for the morning? Absolutely. They had their reason to do it right there. Now we've got the differential between the Brent and the WTI oil. As you can imagine, President Biden has nothing but problems. He looks really bad on the energy policy. The Saudis slapped him across the face again. He got it last month. He got it this month. Hey, Joe, that's what's going on with you with your energy policy. It's right in front of us, folks. Let's change the rules so that we can produce what we have to produce at home and make it where there's enough money in it so that the energy companies go, you know, dividends are nice, our balance sheet's in good shape, let's do something with whatever. Will we? Probably not, but that would be the right thing to do. Certainly a minor thing would get the pipeline open again. Okay. Now we're going to see nothing but new problems happen for Europe and so on because Russia's getting something going on. I'm always concerned. Whenever Putin says he's going to let the public know how poor he's doing in the war, why? I don't get it. I mean, I'm sure you're going to write me why, and I'd like to know. Don't write wise guy stuff. I don't know. But something's happening. Already, one of his ministers today brought out again that as soon as, I guess, President Zelensky was talking to an Australian institute and how they're going on the offensive. And then, of course, the Russian minister, the official, whatever, said, that's what gets our nuclear weapon talk going. That's what we're going to do. Okay. So every time you're going to attack on Ukraine's part, that's what you're going to get. So I told you, that's where the war's at. But Putin's up to something. What it is, I don't know. The army went into retreat. They won't go back across the borders. They'll regroup, and another phase is going to take over. In the Brent, okay, so here we come up, and we're challenging these highs. Now, overbought market, challenging the highs. I could care less of everything you hear. This is where the pros at that number. This is the zone they're taking money off. It's a retest of the 200-day to the upper Bollinger Band. And I know you're going to say, Ira, you got it wrong this time. The market's going to run on it. It's going to do. Maybe. But that's not what the percentages of a chartist will tell you. Same thing in WTI. First challenge again of the 200-day average in the Bollinger Band. So long. That's my thoughts. Rebob. How long are you going to fight that? Well, between this 200-day and the 100 and the Bollinger Band, not embedded, not me. Natural gas. I thought the market would hold here to give you the rally. It lost the embedded reading. I still think it'll go up to that the 752 area where the 18-day average is. So I have plenty of reason here to think energies are fine, corrections are coming. Maybe that's the buying opportunity. Maybe that's what I'll do for my next major report, like I did in the stock indices. But I warn you, tomorrow's going to be a fun day. Learn to take advantage of it. Whether you trade on the ETFs, whether you trade in the futures, in the morning, I'm going to start at the 5:30 update telling you what I'm seeing going into the jobs data. All the action from my point of view tomorrow is going to happen in my ETF video. That comes out, well, I'll start recording about 9. As I like it a half hour after the market opens. As that happens, I've already got what's happened in the futures market impacting everything. And if there's trade setups, I'm going to be all over them. Individual stocks, the ETFs. I mean, I got my clients as traders sidelined. No positions going into the report. I like that. I'm a trader, not an investor in these videos that I do. And as such, I wait. I'm in the great shape. I can't be hurt going in whatever reaction, but we're there to pick up pieces. And I think that is important, or to jump on trades. That's going to be the next thing. So don't be a wise guy. If you're a trader, you wait for your opportunity and you pounce on them. How do you get this information? It's simple. You can go sign up right now. You'd be right there for it when I do these in the morning. Just go to our website under market research, follow my finger. If not, come up here, anywhere here. You're going to see a box, come up an icon, give it a click, take you right in there, and away you go. You'll be set instantly. I'm Ira Epstein. I'll see you tomorrow. Actually, it may not be tomorrow. It's either tomorrow or Saturday, because we're going to be doing then the weekly video updates. You have a good one.